So you might be about to start your investing journey. You might be on the start of wanting to make some money in the stock market. And that sounds all well and good. But what actually is a stock market and how does it work? Well, this is going to be a beginner's guide to understanding the stock market, and we're going to cover everything that a beginner will need to know. So let's get straight into it. What is the stock market? Well, the stock market is basically a platform where a buyer buys and sellers sell or trade shares of companies. It's like a marketplace for ownership in businesses. Examples of stock markets include the New York Stock Exchange, the Nasdaq, and there are many others around the world, but these are some that you may have heard of. The S&P 500 is also a pretty good one. So these are all stock exchanges. These are all kind of places where these things take place, but that is a general concept of what the stock market is. Now we need to ask why companies actually sell their shares, because this is going to allow us to understand why the whole concept of investing exists. Well, there's a number of reasons for this, but generally it may be for a few reasons. It could be to raise money for a company's expansion, research, or other projects, because investors will buy into the company, giving the company essentially more money. Companies also can issue shares at an initial public offering, known as an IPO, where they go public. Then we have investors who buy shares to own a portion of the company. So what I'm trying to say here is that there are multiple benefits, right? It can possibly be beneficial for investors if the company goes up, and it could also be beneficial for the company as it can allow them to raise the capital that they need, the money that they need to continue to grow the business. How does the actual concept of the stock market work though? Well, companies list their shares on an exchange, something like the S&P 500, something like the Nasdaq, for example. Buyers then have the opportunity to buy shares, and sellers have the opportunity to sell shares. This is what we would call trading shares, right? If we are buying and selling, we are trading our shares through brokers and platforms. This might be your investment platform, your investment broker. This is where you can buy and sell your shares. Stock prices fluctuate based on supply and demand. If a lot more people are buying than what more people are selling, then the price will go up. If a lot more people are selling than the amount of people that are buying, the price will go down. So it's very much related to the demand for the stock. There are a few key terms to know when it comes to investing. What are shares? Well, shares are simply units of ownership in a company. That is what a share is. A dividend or dividends, that's a portion of a company's earnings which is paid to shareholders. So if you own shares, the company may pay you a fraction of the profits as a reward kind of for investing in the company. This is a dividend. Then we've got market capitalization, also known as market cap. This can be referred to as the total value of a company's shares. So the whole value of the company's shares equals the company's market cap. Then we have the indices or indexes. Indexes are groups of stocks that represent a market's performance. As we spoke about before, the S&P 500 is an index. The Nasdaq 100 is an index. Dow Jones is an index, for example. Why do prices change in stocks? Well, as we've already looked at, it could be related to supply and demand. High demand increases prices, whilst high supply decreases them. So what that means is if more people are buying than people are selling, the price will likely go up. If more people want to sell than people want to buy, the demand has dropped and the supply has increased, so the price will likely go down. It could relate to a company's performance. If there are strong earnings, it could drive a stock up. If there are weak earnings and weak investor sentiment, people do not think the company will do well, likely the share price could go down. Of course, we have other factors, such as market sentiment as a whole. This could revolve around news, trends, investor emotions, and also in the modern day, social media, right? We've seen in the last couple of years how social media can influence market and investor sentiment. Then we have other economic factors. This can be things like interest rates, it can be things like inflation, and economic growth. These can all affect prices across the stock market and across a particular company or industry. If something's happening in that niche, if something's happening in that industry, it could massively impact stock prices. Then we've got the actual concept of investing. Why would we do this? Why invest? Well, there's a number of reasons which could make investing worth it. For example, there's a potential for long-term wealth growth. We could see our return on investment be pretty decent, in which case we likely would make money and we'd build some wealth. We also have the opportunity to own companies that we believe in. Think about it. To start a company like Apple is intensely difficult. However, with the stock market and investing, you have the opportunity to own a small fraction of that company and potentially benefit from it if it continues to rise. Then we have the opportunity to earn dividends. If you have enough money in the stock market, and we've seen this happen before, people can simply make a decent amount of money in income on their dividends, on what the company pays them if the company does offer dividends. Then we have the overall concept of beating inflation over time. Look, over the past 20, 30, 40 years, the stock market generally has gone up more than inflation, so it can be a good way of preserving your wealth, preserving your assets, if not even growing your wealth. Then we need to talk about how you would even start investing. There's a lot to learn, and we're going to be covering it on this channel, but I would say learn the basics. Understand many more of the key terms and concepts. We've only talked about some of the basic ones here. It's definitely a really intense learning experience, but you need to learn as many concepts and terms as you can. Then you can choose a broker, open an account. That might be an app or anything like that. Research stocks, look into companies and industries that you are interested in. There's a lot that you can look into, there's a lot of ways that you can do this, but it's always important to research your investments and make informed decisions. Especially when you're new, it's important to start small, as with no experience, investment likely can be risky. So invest an amount that you're comfortable with and don't take too much risk. There are a lot of common mistakes that initially people make when they start their investing journey. We often see people making emotional decisions. Try to avoid panic buying or panic selling. If a price goes up massively, don't necessarily chase that out of fear of missing out, and if a price goes down, be aware as to why and ask yourself if it really is all too bad. We have a lot of people, especially in this internet age, who chase trends. Don't invest based on hype alone. We've seen this over the past couple of years, people chasing certain stocks, people chasing cryptos, and then they eventually drop because they have no underlying value and the trend dies off. Don't invest based on hype alone. Neglecting research. This is a big one that new investors make, especially if they are following the hype. You need to understand what you're investing in. Understand the fundamental background of the company, what industry they're in, why the stock price is where it is, and what could happen in the future in that industry and in that company as a whole. And again, if you can, or if you want to, try to diversify, as ignoring diversification can be very risky if you put all of your money into one stock. You know, it can be the easiest way to have massive wins, that's true, but it can also be one of the easiest ways to have massive losses, as you are completely reliant on the price of that one stock. So, if you're ready to start your investment journey, be aware, the stock market can be a very powerful tool for building wealth. Remember to start small, stay informed, and think long term. Remember, every expert investor was once a beginner. Thank you for watching this video, guys. There's a lot to learn, and this is just an introduction into the basics of the stock market. But I really think if you take the time to research and look into this further, you'll have a very interesting investment career, and it could be very profitable for you. Thank you, and I hope to see you soon.